Hello and welcome to our free financial forecast. Today is Thursday, May 12th. I'm Robert Charles, and in this video you'll discover all you need to know in order to trade and forecast the natural gas market. And for those who've been following along, this is a follow-up to our natural gas series. It's turned into, due to popular demand, but a lot of requests to update natural gas, so we're going to do so again. And just by way of recap, in case you are new and haven't been following along, we started buying and by signals. We'll start with the daily chart back here in natural gas, May 21st, and I'm sorry, March 21st, March 8th. Pretty much when it took out these highs in here is where we were looking to start buying natural gas, and we had another buy signal on May 2nd. And of course, if you followed along, it took the trade, did very nicely, and we went up into our target zone, which is, well, the original one was here, but then it got expanded up here to this area that we are now circling, and we will, so you can see the price is pretty much bouncing around the extended targets and the top of the zone, and that's where we sort of settled in. We're forming a congestion zone here on the daily chart. We're going to take a look back at the daily chart in a second. If you take a look at the weekly chart, which I'm going to focus on right now, we started having buy signals later in March, rather than the daily chart started having the signals in mid to beginning of March. So up we come. All right, so essentially the same story here. The buys worked very nicely. We initially went right up to the black line. I don't pay too much attention to the wicks, but it was enough to get us out. And we went now to the top of this resistance zone on the weekly chart. And as you can see, just like on the daily, we're starting to bounce around in between the support and the resistance. So this resistance, this old resistance, the beginning of the zone is acting as support. And we're starting to form on the weekly chart the very early stages of what looks to be a bull flag. Now, if you take a look at when the cloud will start rising, remember the cloud is sort of an equilibrium point. Price has to expend energy to get away from it. Its natural inclination is for price and the cloud to come together. And right now, it's quite a bit of ways from the cloud. And that cloud doesn't really start catching up to price right now until on the weekly chart in October. So it's possible we're going to get an extended congestion zone here, which is why I'm pointing it out. For the bull case, however, you notice when the price came down and tested the bottom of the resistance zone, found support, it really rejected it quite strongly. That was a very strong rejection, a bit bullish. However, it's still smack dab in what is a congestion zone in this beginning of formation. So just imagine price kind of doing this for a while, and that is a high probability scenario for natural gas. However, on the daily chart, I want to point out a potential buy signal here. This is a setup that I use from time to time. It's a bit different than the setup we had here. What you could see is a price on the daily chart went a little bit above expanded targets, which were here. You see in the weekly chart, it pretty much hit it on a dime, the top of the zone. But on the daily chart was just ahead of it. It went a little higher than we anticipated, and now is bouncing off of the beginning of the zone, the resistance zone here, and it's bouncing around as I already pointed out. Now this is essentially a retracement back inside of this congestion zone, and we had 3 buy days, and we're starting now to pop above the conversion line. If you are an aggressive trader and you are aggressively bullish natural gas, here is one way you could play this. It's a bit aggressive, so watch. You would wait until price takes out today's high, assuming it doesn't sink from here. If price takes out today's high, and that high remains above the conversion line and the baseline, or above both the conversion, the blue and the red, and they stay in this alignment. So basically, what we're at is we're above the cloud. Our momentum is up. The blue's above the red. We see price starting to go back above the blue. It's above all 4 lines. I mentioned this from time to time in our premium service. Whenever we're in the premium service, we're looking at all of the major markets in this exact same way. And you often in those videos will hear me say, if you're looking to be aggressive, wait till price goes above all 4 lines. Well, that's happening here right now. So this would be a potential setup bar. We need to go now above the high by some amount that you like to use for a trigger. Then you would buy it. Now, where to get out? If you look at the weekly chart, notice I'm saying that this looks like it may be forming a congestion zone. Not a guarantee. This market is quite strong, and perhaps it's going to do what it normally doesn't do and blow right through the top of the zone. That's a small percentage play, but it could happen. It does happen. It's just the more probability is we're going to stick here and go sideways. So I would get out near the top, these old highs. I usually like to use the high close of this move near the high, but somewhere up in here before it breaks the high is where you could take not a significant portion of your position off. And if you want to hold some, it wouldn't be a bad idea to hold some and see if we break it and we do get a new leg up. That is possible. I just think that's a smaller probability than us going sideways for a while, in which case we won't significantly take out this high and we'll just sort of bounce around. So again, you could take a buy above today's high, assuming we're above all four lines are in alignment like they are right now, and then you could take a buy, and I would take it up till here, get somewhere out in here, get out of a significant portion of your position, and then you can hold some to see if we do get a break to the upside. So that's one way to take a daily trade. Now take a look at the 60-minute chart. We are still technically speaking in a downtrend as far as the cloud is concerned. I know price is above the cloud. The cloud, for those of you who are new to the cloud system, is the area, the shaded area is the cloud. We call this the Ichimoku Cloud. This comes out of this is a Japanese technique. It's an older technique. It's similar to something like Elliott wave. It's just not as well known in the West. However, this is well known in the East, and this cloud, we're above it. However, what many cloud traders don't pay enough attention to, in my opinion, is the lagging line. You see how the lagging line is finding resistance at the cloud? Here and here. If you look, brought in here and here. The lagging line reacts to the cloud. It found support here. It found resistance here. It does react to these lines of the cloud. And it hasn't crossed over yet. That's what's holding price up right now. Doesn't mean it won't clear it, but until we get 3 bars above the cloud, of this lagging line above the cloud, we don't call it a trend. Yes, it's a conservative way to define the trend, but too many times we see price go above the cloud, the lagging line doesn't, and then it sinks, or reverse if it's an up move. Any case, however, having said that, we still have this green 0, 1, 2, 3. Price is clearly above the cloud, and we do have, if you think in Dow theory terms now, this was an old high. We have a higher high with a 1 relative to this high, higher, a higher low, 0 to 2, higher low, higher high, higher low, and we now have a new higher high. So this is a complete move, 0, 1, 2, 3. Dow theory terms, this is an uptrend. It's just not by the cloud. So that's why I put those the green in. And oh, look at this. I totally forgot to put in the target. So let's do that quickly. And there we are. So this would be your equal lane swing target. The top of the zone would be here, and normally I'd have this shaded in. So we'd be 0, 1, 2 is the active wave, even though it isn't technically an uptrend. Now, I favor personally that this uptrend is probably going to continue. What's happening is that the market right now is struggling to take out the top of this pivot, the wave 1. We have some wicks above it, you see, but every time they try to buy it, the sellers step in, and that's why the lagging line isn't. It's essentially, this is a tell, sort of a shorthand way to see that price is having trouble with resistance, and you can see that if you just look left using price, it's just an easier way to see it looking at the lines. But either way, it's not getting above this this wave 1 high, not yet. I'd still expect it to, and that's why we have that potential buy signal on the daily chart here. That's why I'm saying it needs to take out the high of today, because if it does that, then on the 60-minute chart, of course, we will have now broken these highs, and we'll be off to the races, most likely to the equal lane swing. This is the most likely target, and now that I've drawn it in, although I apologize, I thought I did, maybe it didn't get saved here. Take a look to the left of where this equal lane swing is. What do we see? Span B, a horizontal span B. Markets react all the time to these. So if price does come up here, we have 2 reasons to think it's going to probably find resistance right around this spot. We have an equal lane swing target, 0, 1, 2, and then 3 goes up, and we're right around this span B horizontal area. So anyway, that's that is another reason why you could think about taking that buy off that daily chart as well. So that's how I was looking at natural gas. The bottom line is we have an upside bias for sure, right? We're in an uptrend, a strong uptrend on the weekly, strong uptrend on the daily, and we're starting to form a new uptrend here on the 60-minute, and very close to it. And we have a potential buy. However, the caveat is that in this configuration on the weekly and on the daily chart, what we tend to see more often than not is sideways action. If you want to be a bit aggressive with it, you could say the sideways action started back here, and we had a false breakout to the upside and came back into this congestion zone. The weekly chart, much newer, of course, but we are starting to see some sideways action in this market. So if you do take this buy, you could take it up to somewhere in this closing area. If you want to be really conservative, use the equal line swing here. See the target on the 60-minute chart if you want to go that route. So in any case, this is going to put you in the same general vicinity. You won't be too far off the mark, although this daily chart will be a bit more aggressive. So it just depends on how aggressive with your exit you want to be. This would be a more aggressive exit, a quicker exit, and then this close up here on the daily chart. So that's how it looks on the natural gas, and we will keep watching it. And if there is interest, we'll post updates and see if in fact this market did go sideways to up or not. So thanks so much for watching. Please consider subscribing to the channel or our email list, which we send these videos out. And we do send regular free forecasts of various markets here. And of course, you can also go to ichimokukcloudtrends.com, link in the description if you're watching this on YouTube, in order to check out our premium service where we do analyze all the major markets every trading day. Thanks again for watching. Have a great rest of your day.